Hi, this is Mike Swanson of Wall Street Window, and I'm in the Bahamas at a... No, I'm coughing. Okay. Hi, this is Mike Swanson of Wall Street Window. I'm in the Bahamas with Dave Skarica on Luther Island, which is where you just moved to over the past couple months, and been hanging out here for a couple days and going to be on my way back home soon. But before I left, I thought we'd do a video about some of the new trading ideas that you have, and maybe talk about your place a little bit too first.
Well, let's get the light stuff out of the way.
Yeah.
I'm on top of this like 170-foot hill here, probably the second or third highest point in the Luther, and maybe even the Bahamas. Bahamas is very low. There's really nothing above 200 feet above sea level. And that's why I picked this house, and because the Luther is very slim and long, so essentially the island at most points is only a mile east to west. So I have a view, we're looking, this is the best part of the view, looking south east down the Atlantic shore, and I can probably see about 20 to 30 miles down. So here you can watch the sun rise. On the other side of my house you can watch the sun set. And that's why I picked it. And if you hear noise in the background, it's a nice house and it's well built, but there's a million problems I've had with it. So I got some guys working on plumbing and electricity and all kinds of things I've been putting up with for the last month. It'll be worth it when it's done, but I guess there is a downside to living quote unquote in paradise, right? So
well, I mean, it's a pretty amazing place, and one way you've been able to live like this and finance this kind of lifestyle is through your investing and trading and so forth.
Yeah.
And we do lots of interviews on my website. I've talked before, and you really specialize in gold and precious metal stocks, and people may not realize how much investing you also do in emerging markets and with global trends. And before we do this video, you're talking about an interesting trade that you have on now in Japan. I was hoping you could fill in people on that a little bit. Yeah,
like I'm always looking. I'm kind of more of a contrarian in nature. And a few years ago, Jim Rogers said something to me that just said something in general that really stuck out to me. He says, whenever you make an investment, just think to yourself, how much can it go down? Like that's kind of what you should ask yourself. And like the trade I was looking at right now, I saw an interview with Kyle Bass, and he takes a different view of Japan. He's kind of negative. Like Japan is one of the highest debt to GDP levels in the world. And, he thinks that Japan's going to be in the next debt crisis. I kind of think that Japan is near the end of a 20-year secular bear market, and the valuations are really cheap, and it's going to, get really, the stocks are going to start moving. But I think two things are going to happen there. Is number one, I think that this yen trade is going to unwind, and the yen's going to move lower. And that can happen either in a debt crisis or either as the economy improves, or they devalue the yen to kind of get exports going again in Japan, because it is a huge export-based economy. And number two would be either, again, in a debt crisis or, as the economy improves and money comes out of the bond market, the 10-year bond in Japan, which has been trading between about 0.75% to 1.5% roughly over the last 10 years, is going to begin to move higher in yield. So my ideas are about 9 months ago, I started going long Japanese equities, as a way to play that. And then now I'm looking at shorting the yen and shorting the Japanese 10-year bond. And there's actually some ETFs, investment vehicles, that we recommended in our newsletter to do this. And these are the kind of ideas I come up with. And I think it's really unique because I don't see, I see newsletter writers talking about tech stocks or gold and precious metal stocks or resource stocks, or, I don't see anybody talking about, shorting the Japanese 10-year bond.
Well, in this type of market environment where the stock market tends to go up and then go down and you base out, then what we've seen in the past 2 years.
Yeah.
And now at the moment we're on this upswing, but I would suspect sometime this year there'll be some sort of correction like last year, then we go back up or who knows what. But this kind of market environment is tough for long-term investors. Last year the S&P was basically flat, so you kind of have to look outside the box now.
Yeah,
these type of ideas,
When you're in a secular bear market in equities, which we saw in the 70s and we've seen the last 10 years and probably continue for another 5 or 10 years, in my opinion, you have to look for different ideas. Obviously, precious metals have been a very good way to be to be contrary to the secular bear market in equities. I think this Japanese trade is great for what you're talking about, especially on the bond side. Is that it's a long-term trade. The worst is that bond, it's not going to rally to 0.5% on the 10-year. The worst is going to sit there at 1%, and you know, you're flat. You got dead money. And the best case scenario is, you know, the bond backs up to about 2 or 3% in yield, which means the prices will drop about 50 to 75%, and the ETF will probably double or triple when that happens. So these are the kind of ideas I'm looking at now, because like you just said, you have to think outside of the box. You know, if you're just owning a regular Dow stock, other than the ones that are really, you know, because the dollar's been weaker in the last 10 years, export oriented, but your average Dow stock really hasn't done anything in 10 years, you have to look outside of the box to make money in the markets.
Well, that's one thing your service does, and well, you know, why I frankly read it every month and look at it. And with when people subscribe now, we're running this special promotion that's going to end soon, but when people sign up now, they'll get that report,
yeah,
you know, detailing this bond trade and how to do it, and you know what to expect and so forth. But this, we've done a couple promotions over the years, like maybe twice a year we'll do this for your service, but this time's a little different too, because we're going to end up raising the price in the future, because you've risen your normal price for your newsletter to what is it now?
It's $449, and it was $349 for the yearly.
Okay.
And basically the reason I did that was 'cause I haven't risen it in a number of years, and I've added on 2 extra services. One called International Contrarian, which is kind of like talks about a lot of emerging markets and things of that nature, and another is like a stock chart service and that sort of thing. And so I decided it was time to raise the price, because I've added these new services and more value to the site. So what we're going to offer here today, and I did this for my yearly subscribers back in the fall, I gave them one more chance to buy it at $349, and we're going to give you another chance to buy this. We charge $97 a quarter right now, and that will probably go up to about $125 a quarter sometime this year. So we're giving you like one last chance to get at $97 a quarter. And by the way, when you get that $97, you'll just keep renewing at that $97.
Yeah, so that the people are locked in at that low price, basically.
Yeah.
So, what anyway, we better take off, and because I know I'm going to have to get out of here soon, and you're probably busy too, and you need to sign up for the service so you can take advantage of it. So go ahead and do that, and we'll talk to y'all later.
Yeah, thank you very much.